We live in a world that's all about moving fast, making a ton of noise, and expanding like there's no tomorrow. But what if the real secret to building a massive multi-billion-dollar empire was to do the complete opposite? Today, we're getting into the playbook of a founder who won big by consistently and quietly going against the crowd.
So let me ask you a question. In this age of celebrity CEOs and 24/7 media, who do you think is the most powerful, yet least visible, billionaire in all of India?
Well, that man is Radhakishan Damani. He's the founder of Avenue Supermarts, the engine behind the widely successful retail chain DMart. And he is an absolute master of quiet execution, preferring to let his company's mind-blowing performance do all the talking for him.
So how on earth did he pull it off? Here's how we're going to break it down. First, we'll get to know the man himself, this invisible billionaire. Then we'll dive into the crucial lessons he learned from the chaos of the stock market, which led him to a totally game-changing anti-retail idea. From there, we'll see exactly how he built the DMart machine, how all that patience paid off in a huge way. And finally, we'll boil it all down into the Damani playbook, the core principles you can actually use.
Okay, so let's rewind. Our story doesn't start in some fancy business school or with a pile of family money. It starts in a traditional Marwari family in Mumbai. Damani grew up in a middle-class home where being careful with money and thinking for the long term weren't just business strategies. That was just life.
He was actually studying commerce in college, but then life threw him a major curveball. After his father passed away, Damani had to leave college to take over the family's small business. This wasn't a choice, it was a duty, and it threw him right into the deep end of the financial world at a really young age.
And when I say deep end, I mean it. He was thrown into Dalal Street, Mumbai's version of Wall Street, back in the 1980s. This place was chaotic, it was volatile, and not exactly transparent. It was right here, in this pressure cooker, that Damani would shape the core philosophy of his entire career.
And this really just shows you the two completely different games being played. While pretty much everyone else on the trading floor was caught up in hype, speculation, and chasing risky bets, Damani was playing a totally different game. His rules? Patience. Protecting his capital above all else, and seeing cash not as something sitting idle, but as a strategic weapon, ready to be deployed at the right moment.
So he made a shift. He pretty quickly went from being a short-term trader to a long-term value investor. He completely stopped chasing market rumors and instead started digging into company fundamentals. He looked for businesses with strong financials, leaders you could trust, predictable cash flow, and that thing investors love to call a durable competitive advantage. Basically, a secret sauce that makes a business really, really hard to beat.
Okay, and this is where the story gets really interesting. Damani took all this hard-won knowledge from the stock market and started looking at the world around him. And what he found was an idea so simple, so overlooked, that it would eventually be worth billions.
Picture this. It's the 90s in India. The retail scene is basically a mix of millions of tiny neighborhood shops and a few new, fancy stores trying to copy Western models. These new guys were all focused on the shopping experience, but Damani saw that they were missing something absolutely fundamental about the Indian customer.
And this, right here, was his powerful, counterintuitive insight. While all his competitors were worried about fancy lighting, wide aisles, and air conditioning, Damani knew that for the huge majority of Indians, the single most important thing was the price. And it wasn't just about saving a little money, this was a psychological masterstroke. It built this deep, unbreakable trust. It made customers feel smart for shopping at DMart.
So, armed with this killer insight, he founded DMart. But here's the thing, he didn't rush. The very first store opened in 2002, and instead of this mad dash to expand, he chose a slow, careful, pilot, and perfect approach. He was obsessed with getting the model just right before he even thought about scaling up. His whole model, this DMart machine, was built on 4 incredibly smart pillars. First, just ruthless cost control. No flashy ads, no fancy decor, just pure function. Second, he owned the real estate, a brilliant move that got rid of a massive long-term cost, rent. Third, he treated his suppliers like gold, paying them faster than anyone else, which earned him better prices. And fourth, he only stocked the essentials that flew off the shelves, which meant his inventory was always turning over super fast.
So for years, Damani is just quietly building his company, staying way out of the spotlight. Meanwhile, his competitors are taking on huge debt, burning through cash, and expanding like crazy. And then came 2017, the moment of truth when his patient long-term strategy was put to the ultimate test, the public market. And this timeline, I mean, just look at this. 15 years. That's how long it took to go from one single store to an IPO. And get this, for more than a decade, he funded this slow, steady growth entirely from the company's own profits. No VC money, no crushing debt, just pure, disciplined, profitable growth.
And the result of all that patience? The market's response was nothing short of explosive. The IPO was oversubscribed 102 times. Think about that. The demand was so insane that the stock opened at a massive premium, instantly proving that Damani's entire philosophy was the real deal.
So this is so much more than just a great business story, right? There's a whole playbook here that we can learn from. Let's distill it all down into the core principles of what we can call the Damani playbook.
So what are the big takeaways here? Number 1, always choose discipline over hype. 2, protecting your capital isn't just important, it's everything. 3, get absolutely obsessed with what your customer truly needs, not what you think they want. 4, profitable growth is so much better than just growing fast and losing money. 5, remember that in the long run, patience almost always wins. And maybe the biggest lesson of all, just do the work and let your results make the noise for you.
And really, it all comes down to this one simple but powerful idea that perfectly captures Damani's entire philosophy. It's an incredible reminder that in business, and hey, maybe in life too, lasting success isn't built on hype. It's built on a rock-solid foundation of discipline, patience, and a relentless focus on the fundamentals.